What is up, everybody? Logan here again with another YouTube video, and I'm excited to get back into uploading. The trades have been pretty solid this week for us so far, and Halcyon and I are back with another one, and we want to talk about a couple things with mindsets with trading, and I think it'll be cool for you guys to just sit and listen to this one, and really excited to get into this. But the one thing I want to touch on is changing your mindset through different market conditions, and I'll let Halsan take it away from here. And I appreciate you coming back on, my man. How you doing?
Always doing well. Yeah, having a pretty chill week here.
Couple calendars.
Couple calendars, slap those on for a couple folks. Couple put credit spreads, a little butterfly here and there.
I like it.
Yeah, it's going well. So I had, as you know, because I talk to you regularly, but had a vacation and was out for about 2-3 weeks. Basically, this month of July, we're not August, but the month of July really didn't do a whole lot of trading, just being gone and waiting for some of the main earnings to get out of the way.
Yep.
But now that we're out of that space, it's now kind of on to, what I think is the most challenging time of the year trade, which is that August, September, and into sometimes October timeframe, where the market seems to get real choppy. And with options, as you know, if you don't pick all the variables correctly, you could be slightly longer term correct, but in the short term, if you're wrong, you really get beat up pretty good on an option trade, depending on how you're doing it. So, and then we had in the Discord earlier this week, had some interesting doing some put credit spreads and got tested at the end of the day, and the next morning on Tuesday kind of opened up a little negative again, and people were kind of panicking, and that kind of brought about, let's talk about mindset and just some tips and tricks and really bring it to some attention if you want to be long-term trading, really the way you should be approaching this, because the reality is the way that we do anything is how we do everything. And in respect for trading in particular, it is an incredible vehicle to expose your flaws in the areas that you don't have very well under control. So there's nothing like the market for teaching you some humility and humbling you in a hurry. We've all been there at some way, shape, or form. So that's what I thought we'd talk about on this one. So quickly, just on a little tip with mindset in general is I think it's super important is to not stack the deck against yourself. And in my opinion, the first 45 minutes of the day, of the trading day, is really emotional and manipulative. And most traders would do themselves a net positive. They just wouldn't look at what's going on in their positions in that first 45 minutes. Almost never is there a time where they have to be managing and tinkering that first couple of minutes. Short of you like trying to buy a panic, sell that somebody else is doing, short of that, almost always it's just better to not waste your brain capital on watching the squiggles and wiggles that are happening in that first little bit. Yeah. There's just so much manipulation going on as Mark is, getting things caught up from the night before and from the European markets joining. I mean, just all that kind of stuff. There's just a bunch of manipulation going on, in my opinion. And a lot of your dumbest FOMO trades happen in that first hour of the day. I mean, it's just, This is how it goes. So tip there, don't waste your breath on the first 30 minutes at least. Outside of that, I do think it's, super important to, be aware of yourself. Like, take a gut check when things are going against you, right? So for example, I mean, everybody has this happen to them, but let's say you put on a position, it goes against you, and it is a great opportunity to hone in on what is going on internally with myself. Am I feeling anxiety? Am I feeling like anger? Am I feeling depression? Am I feeling am I denying it? Am I in panic? Disbelief? What is the emotion that's going on when you're in a trade that's going against you? And usually, if you start actually taking the time to observe what that is, you'll be able to start really controlling that a lot better, because it'll start telling you, oh, the reason I'm feeling so much anxiety in this is because guess what? My account is X and it can only handle a certain percentage, and I'm like 3 times that percentage right now. And by me oversizing, I literally cannot handle a 0.1 movement against me because I'm losing my shit basically.
Yeah.
right? So it will start giving you an understanding of one, helping you hone in on where you're comfortable with trading. And that's kind of step one, is get to a comfort space. Then once you get comfortable, it's kind of counterintuitive, but once you get comfortable, then you got to get uncomfortable again, which usually means that you need to start learning how to size a little bit more. The art of adding to winning trades, that's a whole other thing we can talk about, which I would say for my own self is a challenge to do, because when you got a really good solid winning trade, the thought process of you add more into it seems just crazy with options. But that there is growing massive wealth, that is one of the methods to do it. So that's kind of the thing that, from just a general mindset, is one of the things I think you just take one piece and said, all right, for the remainder of this week, or maybe into next week, I'm going to just take some time and observe what my emotions are around my trading. That should be a pretty good reveal as to what's going on underneath the surface and underneath the hood for you as a trader. And it will help you get much better, because the reality is every single action you take in and around a trade, whether you're entering the trade, managing the trade, or exiting the trade, is in some way you are creating the patterns and the habits that will make you as who you are as a trader. And so if you're doing bad habits, you're going to continue to reinforce those, and they will screw you at some point. It may not have gotten you yet, but it will screw you big time at some point. So you gotta take the time to really look inward and find out what's going on, or internally with myself. And then once I've done this, it's going to give you'll just be a much, much better trader overall. I mean, you're going to, understand, and you'll put yourself in for success versus stacking the deck against you, which is, we don't ever want to do that from a psychological perspective. And for the reality is, for most people, rarely is it, I need the next set of best holy grail indicators to solve my trading woes. Almost always I would start with the psychological side of it, and then I would branch from there. Yeah, I mean, there's obviously a learning curve, and I'm just understanding the basics of what's going on with trading and options, if you're using those, what's happening with the Greeks and all those kinds of things, and all the various variables that are involved. But for most people, they neglect that psychological side, and it will get you at some point in your trading, and it will get you enough that you won't want to do it anymore, because you'll literally hate trading. From that side of it.
I didn't mean to cut you off here, but
no, go ahead.
I mean, you got to see me firsthand experiencing my DocuSign short position, which was the heftiest loss I'd ever taken, around 8,000. Now, granted, I've gotten the majority of that back already, which is fantastic. I think I'm down 3,000 all time on that stock right now. And taking that really hefty loss, the one thing that I kept doing was adding more money into the trade, because I had set a psychological goal of a $100,000 account size. And I hit that for one day for about 20 minutes. And the short position had then started to go against me right after that happened.
Yep.
And that I had a psychological mishap, because all that I had in my head was, I need to get back to a $100,000 account, because that was my goal. I need to get back. So the whole time I'm watching this position go against me, and every 1,000 that I'm getting further away from 100, like when I was minus 97, minus 95, minus 93, and just looking at minus 8,000 before I decided to move on from that specific position. That's really what it was for me. It was that, and you got
talking you off the ledge, or rather talking you to, we need to live in a vacuum here, unfortunately, with trading. You got to have a very short-term memory with those kinds of things.
Yep.
Especially because, as it's when you look at a trade that goes against you, usually you can go back and say, all right, now hindsight's always crystal clear on this. And you can go back and say, all right, if I went through and reevaluated my parameters for the setups that I'm using, did I miss something? And if I miss something, then you learn from that and go forward. Yep. However, there's just going to be times where you just get a bad beat. There just isn't. That is trading. You're never going to be 100%, not even close. In fact, it'd be great if you can be close to 70% of your trades. But it's the bad beats that, whatever. That's what it is. That's a part of the life of doing this. Yep. It is a different thing, though, when you're compounding a bad decision on top of another bad decision because you're revenge trading. And that is one of the worst things to get into. Not that you were trying to revenge trade this, because I think what you were doing was valid, but there was an element, and I know when we were talking about it, there was definitely an element of, I
There's
got to get this back. And now F you, doc, I'm coming after you kind of thing.
and ever since I took that position off, I would say now I'm back to having a neutral viewpoint. Like I have a couple docu condors going right now that are perfectly centered because I stepped back and said, okay, this stock doesn't have to go down. It can do what it, like what it's telling me. It's allowed to do that and it's supposed to. But in my head, I had the bad feeling because it didn't go down the first time or the second time or the third time I tried to short it. I was like, okay, it's got to go down this time. And then once I moved on from that, I'm making money on it again instead of feeling like I have to be right on the position.
Oh yeah, absolutely. The need to be right.
Which is what you say every
Right.
time. I'm like,
What I say is our job as
I'm
traders is not to be right. It's to make money. That's what our job is.
That is 100% it.
Put the ego in check, and it does not matter if we're right or wrong. It's just make money. So
that on a shirt.
Yep, make money. That's what I'm here to do.
It just says, it doesn't matter if I'm right or wrong. Just make money.
Yeah, that's the beauty of what we do. And that's also being retail. You can flip on a dime one direction to the other direction, right? You're only a commission away from swapping one way to the other.
Oh yeah.
So this is kind of maybe the final thing we'll talk about is just broad market psychology, because in a lot of ways, most of the market is like a giant herd that's moving from one space to another. And I know I feel it, you feel it, everybody feels it who trades, is you can get that kind of internal sense where you're being pulled along and it doesn't make any sense why it's going one way or another. And I wanted to kind of give some just a quick overview of what that's kind of like from a psychological perspective. And then when you do finally get a market that shifts and changes to a different characteristics and different temperament, what you should be looking for and how you start tackling and trading that. Because a lot of individuals who just started trading really post COVID or around the COVID time, I mean, they have traded in a single market that's essentially a very strong trending one direction market.
Yes.
And unfortunately, those are the same folks that are going to be, well, hopefully they've done well. They're saying the same ones are going to be at the most risk for maximum pain when it does switch, because what they were doing isn't going to work anymore. So selling a bunch of put credit spreads 24/7 is also going to start killing your account when it starts switching and going the other way on you. So absolutely. Anyway, I just want to kind of talk through that. So I'm actually zoomed back into where I feel like there was the last major cycle of the full on emotional psychological range that you get when you go from that kind of optimism to euphoria that the market's just going to the moon, to then some of that kind of complacency. And then when it starts dropping, you get some of the anxiety and panicking and, anger that's going on, and depression when it kind of hits its low. So I want to just kind of walk through that visually, what that looks like. And then, but then talk through when you're in those spaces, how do you basically trade through them? So this is the 06-07 market right here. So this is 06 into 07, which was kind of really, in my opinion, the last major cycle of psychological that we've gone through. And we're really getting back to a similar state, in my opinion, of how that kind of very late cycle bull market, what it was doing from just the way the price action was working. So this whole section right here is all basically all of 06. And it was an absolute hell of a year. That year was you get into anything and it just goes and goes and goes and goes. And one of the things you and I are talking about, this is maybe last week or earlier this week, was, when you're in a trending market, that 80% of the time that a trending market is testing the trend, it holds and bounces off of. And you can use a couple different things for what you view as your trend. I like on daily charts that we use the 21-day period moving average. You can use other things, 34s or whatever, but I like the 21 day as kind of like the main trend. And you can see when you hit to this red, which is this red line, you can see when you touch it, it's touch the trend, bounce off, touch the trend, bounce off, and you can see it keep doing this over and over and over again. And I bet you close to 8 or 9 times before it finally broke through it, and then you repeat the process again, right? And during this cycle, I remember about halfway through this, as a time when I was managing money, I was thinking to myself, I'm effing genius here. because, I was like super long emerging markets and a bunch of, it was all mutual fund investing at that time. ETFs really wasn't all that popular.
Yeah.
And so it's lots of mutual fund stuff, just growth mutual funds and major markets. And I was like, I'm smacking this market around, I'm whatever. I got nothing. Whoopsie. Hello. There's a little drop right here. But then it immediately, buy the dip, man, buy the effing dip. And, sure enough, it just went rocking. And when it got around this time frame, most investors, and I remember some of the older people I was working with at the time, were like, I want to get more aggressive. Give me, I don't want to be at my, more conservative nature that I typically am. And when that starts happening, it is when the time you should start saying, hold up here, because shit's about to get bad, is if when you get your conservative investors asking to get real aggressive, give me some more stock of whatever that is, or give me more aggressive mutual funds or ETFs, whatever they're trading at the time.
Look at that move down.
Yeah. So this, when you had that kind of the chink in the armor or the kind of crack showing up here, which initially was this, bounced off, came back up, and then we had it happen again. And in August, this was August of 07. And then we had this kind of one final like thrust back up. And again, I remember this whole little section here. This was like euphoric. We're going to the freaking moon. Also, like, this is 1550, which is hilarious. I think we were at 1500 at that time. And people were like, yep, we're hitting 2000 next. And it was like, there's no problem, no big deal. We're going to do exactly like we did here, right? Bounce down, then go flap another couple hundred points, bounce down a couple hundred points. Except, oops, we didn't, right?
Yep.
And so the thing is, when you're trading in a trending market, right, this whole little section here is the sideways trend. It's big sideways, but it is a sideways trending. Again, what you want to do is when you get down to these moving averages, that's where you're looking at getting long. So that's a really great risk reward entry for put credit spreads. And really anything that would be a setup on your individual stocks when your broad market here is going back to its moving average, that's a good place, especially if you're trending up. It's a good place to put those on and get tighter, get more like Delta 30s or Delta 40s and enjoy the fact that you're going to likely bounce off it. And I would take those odds all along. Okay. However, when you don't do that, right, what ends up happening is you get this kind of interesting, when we went up, came back down, you get this interesting space around here where people get really kind of complacent with the market, as I would say it, as they start justifying why it needs to chill here for a little bit, while it needs to build a base again for a little bit, and then it'll rocket off again, right? And so it just needs to kind of be relaxed before this next big leg up happens. And then whoops, it doesn't happen. And also you have this push down. And I remember when this little place took on here, there was a ton of, you say, oh, this is main support here, and here's support again right here. And that's also support right here for this, this level at 1400 is not going to break, no way. And then it does. And all of a sudden the anxiety central happens, right? And everybody who was convinced that it was just going to test and bounce back up again, it's not doing that. Now you're in this interesting place of anxiety. And then when it starts going lower, you're kind of in this place of, well, the market's absolutely coming back, no question, just buy more here. And sure enough, this is like this final little fake out before you got absolutely smashed down here. Wow. And again, what happens, like how this took almost, a year and a half to go through this process. And we now do it in like 60 days, this kind of wild, fast movement. But the fact, if you would have maintained your same strategy all the way throughout this, you would have lost your entire account, if you were doing what you were doing on the way up. But what really ends up happening is you end up doing reverse it. Once you see that you've fallen underneath whatever your longer term moving averages, and in my case, I like the 89 period moving average on my dailies to be kind of the bigger trend. And when we start falling below that, then I use that as the means for, all right, whenever I get back up to that range, I'm doing call credits or buying puts on the market, especially if I don't have any kind of other signals lining up from the indicator perspective. And sure enough, you're getting absolutely hammered. So the final thing that usually happens when you get down into this place is people get super angry and depressed, kind of going back and forth between that, because at that time, the market's now down almost 60% from the peak down to where it is here, around $600, which is insane to think about that.
That's insane.
Yeah, right. And this was just an unrelenting day after day after day of big down days. Also, back in this time, to see a 1% move in a day was really unusual. So to have that start happening day after day after day after day was completely like, what do you do with it? I mean, people, it was panic everywhere. People were completely just freaking out about this because at this point, when it got down to this, sub 600 range or in the 600 range, yeah, essentially people were just like, F it. The market's just going to go down to zero at this point. There's nothing you can do. It just goes down to zero.
It's gone.
It is really, but the reality is, if you know what to look for, which we'll do that in our next video, we'll talk through how do you get a heads up when this is going to happen? Because guess what? It's going to happen again. And we're going to have this happen several more times in our history of trading and investing.
I can't wait.
Trading in bear markets is one of the most profitable things you can do if you know what to look for and how to actually, operate within it. And we'll do that on the next one is actually talk through, I'll lay over the top of this, the main indicator I use, it's not actually an indicator, the main ratio I use to measure when we start entering into an environment like this. And then again, it's about, it feels counter trend for a while because most people don't believe you're in a bear market until you're about 3/4 of the way through a bear market.
Oh, 100%. I remember March.
Well, even in March, right? I mean, if you zoom over to that, I mean, that was a super ugly, time frame, of course. But
I know it wasn't like a long bear market. I just know we had a quick little.
But just look at this run here, just straight up with literally almost no hiccups all along the way.
Oh yeah.
So and really, I think what's going up here, we're in the kind of euphoric space right now.
Go long.
I mean, it's in the I'm a freaking genius is what this is space a lot of people are in. Just got to buy put credit spreads and you're good to go. That's all you got to do. Yep. Nothing else. Just keep buying calls and you're good. However, the first time we bump below the 89 and actually do it with any kind of authority, we need to have a really hey, major heads up here because it's been a long time since that's happened. And you can't just keep doing the same thing you've been doing in this environment because it will not work.
I even remember how much of my account went down in September from that high to the low at the beginning of October.
Over here?
Yeah. Just that correction.
And this would be a baby correction and when we get the real deal happening here.
Well, that's the thing. I just remember my account then was down because my account in the initial crash dropped 30% like the whole market did because I was very indexed heavy then. I was trading a little bit of options, but I just at that time was in college, not really even focusing on it. But I remember in September, I even sold a lot of my stocks that I held, but I still held a couple things that I remember being down 10%. That drop from 3,600 down to 34.
Crazy.
Yeah, I just remember I was like, wow, I'm down 10% in the last month. And it was just September. And even my one buddy references it all the time because he got hit for so much because he was just buying options because he's like, dude, we're not going down all of August. And I remember that first day and he just messaged me. He's like, dude, I'm down $3,000 today. I got my head ripped off. That first day. And I was like, oh.
Got to adjust your strategies or you got to have a really good foundation for why you're getting into certain things.
Yep.
So we'll do that on the next one here, which we'll get it up sooner than later, which is I think one of the most powerful tools it's a long view. So it doesn't really help you day in, day out, but it will give you a better perspective. So you're not so zoomed in, which as option traders, we tend to get super zoomed into, what the little tiny squiggles are doing day in and day out, and you can't see the whole picture usually. So I usually check this about once every other week, once every 3 weeks, this bigger picture to see where it is. And we are starting the process of what happens when we enter into the phases back here in 08. That is happening, which is kind of interesting to think about that. I'm looking forward to trading that again. I know most people don't want to trade in that kind of environment, but it isn't when you learn how to do it, it's a great way to make money in bear markets. So
yeah, when you're so zoomed in that people are updating you that the expected moves dropped $0.50.
Yes, just like that.
The expected
we're 50 cents different.
It's dropped 50 cents. We're safe. No, now we're not. We're not that.
My Delta 5 went to Delta 6. Should I get out? Oh my God. Really?
That's your cough.
God, I'm choking on that.
He's dying.
Dying over here. All right, homie.
Cool.
There you go. We'll get into the next one after this.
Yeah, sounds good, man. I appreciate you coming on again. And
Should be
Everything in the
eye-opening, so.
Discord's been pretty solid lately. I'd say you'd say the same. Just
Oh, yeah.
and it's kind of fun just corralling everybody on a little correction day. Like, and by correction day, I mean when we're down to 1% and
I know, which is
how
like,
do we hedge?
this is nothing.
How do we hedge for a market crash? I'm like, we are down 1% today.
The Black Swan event is coming. No, it's not. Not right now, at least.
Cool.
All right, man. Good stuff.
It. Yeah, we'll chat soon. If you guys have yet to leave a like on the video, do it now. Leave a subscribe, a comment below for Halcyon and I, and we will get back to you on that. So it's going to be everything for us, and we will see you guys in the next video.
Adios.